As we close out the year, this is the moment when most families start thinking about taxes, deadlines, and all the things they should be doing before January. And while those details matter, I've found that the most valuable year-end conversations that we have are not about forms or numbers at all. They're about clarity, and they're about what changed in your life this year. They're about what your wealth needs to support in the year ahead. I'm Steve Martin, Managing Partner and Wealth Strategist here at SRQ Wealth, where we help families find their freedom by simplifying their financial lives. The holidays are already overwhelming. You're getting ready for guests, digging out those ugly sweaters for a dinner party, and buying gifts. The last thing you need is a long list of financial dues from me right now. Let's face it, if you have a long list, they won't all get done. And you'll just feel worse. This time of the year can feel hectic, so I want to help you focus on the decisions that actually make a difference. The choices that bring clarity now and confidence later. First, let's start with what's shifted in your life this past year. Before we talk about strategy, I always encourage families to look back at the year and ask, what changed for us? Well, maybe you changed jobs. Maybe your income shifted from one source to another. Maybe your family grew, or you took on some new responsibilities. Or maybe you sold some property, exercised some stock options, made a charitable gift that wasn't part of your original plan. These life changes affect your taxes far more than people realize. And acknowledging them helps you approach this tax season with a much clearer picture than what you need rather than reacting to the surprises later. This step sounds simple, but it gives your financial decisions depth. And it connects the numbers to your life, which is where good planning always begins. Number 2, revisiting your income picture and considering the timing of your income. For high income earners, how and when your income is recognized can have a real impact, and you may have flexibility in controlling that. If you receive bonuses, exercise options, or just have irregular income around this time of year, now's the time to see how that fits into your tax picture. There might be some opportunities to smooth out your tax bracket. Or, for example, are there deductions that can help offset any of this unexpected income? Lastly, is your withholdings on track? Have you made all the payments you need to do? Or is there an estimated payment that still needs to be made before year end? It's not really about manipulating the numbers. It's about understanding your actual story for 2025 and making some decisions that reflect that. Number 3, you want to align your giving with your intentions and then add on tax efficiency. See, many affluent families use the end of the year to think about their generosity. And done thoughtfully, charitable giving can really make a huge impact, both to you and the intentions you have, as well as just being tax efficient. It's time to ask, what causes have really mattered to me this year? What impact do I want these dollars to have? From there, we can help determine whether you give directly, donate appreciated securities or cash, or potentially use a more sophisticated strategy like a donor-advised fund, which can create more flexibility. If you're a consistent giver, for example, you tithe monthly to your church or to your synagogue, most people do this in cash. What if there was a smarter way? Well, I can assure you there is. When you connect giving with intention first, the tax benefits become a bonus, not the motivation. Now, number 4, review your retirement options, but think bigger than just the limits. For high income earners, maximizing your retirement contributions it's routine. You all do it. But this year-end review is really about something broader. Are you saving money in a way that matches your goals? Does your retirement strategy really reflect what you plan to do 5, 10, or 20 years from now? And is potentially using a Roth conversion strategy worth considering while rates are fairly stable? The goal isn't just to check the box, max out the fund. It's to ensure your saving strategy it lines up with your intentions, not just IRS limits. Frankly, we often find people that put too much in retirement plans. Deferring taxes is fun. I'm right there with you. But dealing with a large IRA later in life is not. Saving should be done with an end game in mind, not just looking at the immediate pleasure to avoid a few tax dollars. And lastly, let's look ahead to 2026 with confidence, not with anxiety. There's a lot of noise right now about potential tax changes in the years ahead. High earners are wondering what the next few seasons might look like. So my encouragement for you is this: plan for what you know, make a contingency for what you don't, and then frankly, don't worry about what you can't control. No matter what the tax landscape becomes, your long-term strategy should be built on your values, your goals, and the life you want to create, not headline-driven reactions. When we take time now to clarify what next year might hold for you, your major expenses, travel, maybe helping family, potentially real estate decisions, business moves, we can create a tax plan that supports those goals very naturally. If, for example, you might experience a very large capital gain in 2026, we have strategies that could avoid much, if not all, of that tax bill. If your advisor doesn't have this ability, we should be talking sooner than later. The more clarity you have about the year ahead, the less stress you're going to feel when tax season actually begins. So let's bring that all together with conversation. At this time of year, people try to tackle their planning alone, but the truth is the most effective decisions are rarely made in that isolation. Families that we serve, they get the most valuable information from a simple conversation, one that brings together your life, your goals, and all these opportunities. Planning isn't about perfection. It's about alignment. It's about choosing what matters most and making sure those choices are supported by your financial strategy. And while it may be okay to do your shopping on Christmas Eve, it won't be okay to start thinking about your year-end planning then. You'll regret all the opportunities that get missed. As we head into this tax season, my hope is that this year feels a little bit lighter and clearer for you. Start with what shifted in your life. Revisit your income picture. Align your giving with your intentions. And taxes second. Review all those retirement contributions. And lastly, look ahead to 2026. And I recommend doing it with an advisor that can help you coordinate it all. At SRQ Wealth, we've been called lots of things: personal CFOs, financial quarterbacks, coaches, but our business cards say concierge wealth planners. It's our goal to take these things off your plate this time of year so that you can get back to what's important: your family, soaking up the holidays, and don't forget those ugly sweater parties. Well, hey, I'm Steve Martin, and you've just taken your next step on your journey to true wealth. For more great content like this, click the subscribe button so you don't miss another episode. And if you'd like to talk through any of these ideas or simply want a second set of eyes on your situation before the year closes, our team is here to help. We want to approach this season with confidence and intention. And remember this great ism from Dave Ramsey: money can buy you fun, but it can't buy you happiness. That's a good one. Hey, we'll see you next time. God bless.